session on GST. We are having topic of various penalties under GST along with case laws, and we are having with us eminent speaker CA Vinod Awtani ji. Before starting the session, I request everybody to first rise for the motto.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामंशो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनाद्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you. Now, before wasting much time, I request past convener CA Nilesh Bhai Vasa to introduce the first speaker of the session.
I would request those who are sitting in the back, please come in the front. I think every place is same CPE hours are, I think, allotted. So you can come in front. So it is more comfortable for the speaker also and for you also, because it's a rectangle hall. It's better to sit in front. Yeah. Thank you very much. Good morning, friends. Thank you, Jawad Vasa, for giving me the opportunity of introducing our learned speaker, Shri CA Vinod Awtani ji. Sir CA Vinod Awtani ji is from a 2004 batch, chartered accountant from our institute. He is a partner in SS Gupta and Associates LLP, and he is assisting Mr. SS Gupta since last 21 years in the field of GST and taxation. He has been handling matters in central excise, service tax and GST, and has been appearing in tribunal at various cases. Handled clients in hospitality, construction, real estate, banking and financial, manufacturing sectors. He has presented seminars on indirect tax provisions at Institute of Chartered Accountants of India, WIRC, BCA, Study Circle, and even at Department Training Institute and State GST Training. With this brief introduction, I would request Jawad Vasa to please present a memento on behalf of Borivali Central CP Study Circle as a mark of love and affection. I would request my colleague Aman to please present a CABF receipt on behalf of Sir to our institute. Now today is our topic on various penalties under GST and various case laws. I would now request Vinod sir to please take charge of the session.
Hello. Good morning, everyone. Good morning. So, thank you, Borivali Central CP Study Circle conveners and all the committee members. And thank you for giving me a memento. So it will save me from penalty at my home. ठीक है. Once I give proper evidence regarding supply of goods and services, then there's no penalty. Okay. So, I mean, it is Sunday morning, right? Sunday morning, we are one of the very few professions where on a Sunday morning we have come to listen about penalty. ठीक है? है ना? How to save penalty, how to save from penalty. Of course, this session is for penalty, but I hope for everybody this will be input tax credit because they will be receiving services or something, and I'll be receiving more from you. Because let me tell you, I am a Sindhi. 100 रुपया दूंगा तो 150 लेके जाऊंगा. ठीक है? So what I want to discuss the practical scenarios. How many of you have handled GST notices? बाकी लोगों ने नहीं हैंडल किया है तो उन्होंने रिटर्न सही भरे होंगे, राइट? सो दैट मीन्स दे हैव फाइल्ड, either they have filed correct returns or they have filed wrong returns, right? Because I think we all filed correct returns, but we receive correct notices. Okay. So, and how many of you have paid penalty? Or, not personally, your clients, you had to actually advise them, okay, you can pay this penalty or you can pay. Okay. There will be few cases where we might have paid to close the proceedings. Now, why I want to focus on penalty? Because it is my topic today. Okay? So I have to tell you the importance of penalty. No, that is not the reason. The reason is, there are twofold reasons. When we see any legal submissions, our main focus is on tax. Our main focus is on setting aside the demand. Because once demand is there, penalty, interest, everything is piggy bank. But there can be scenarios where even though tax is payable, you may be able to save on penalty, first. Second, penalty is directly linked with limitation. So the submissions on penalty are also linked submissions on time barring of the notice. So if you receive a notice under section 74, and if you are able to prove no malified intent, you also save on the tax, you also save on the penalty. So with this background, we'll start the discussions on the penalty. My voice is clear, थोड़ा echo हो रहा है? Perfect. सर वो स्टडी सर्कल कोई रूल नहीं है ना, लेट आने वालों के ऊपर पेनल्टी? हाँ? चलो ठीक है. So what is penalty? See, penalty is basically a punishment for any violation of law, any rules, regulations. We all know the concept. Now, penalty in GST cases basically is a civil obligation. When you talk about offenses, it is criminal punishment. And when we talk about penalty, it becomes a civil punishment. So once we'll discuss main background of the penalty provisions. Then we'll go to each and every provisions also. So in our GST, we have section 122 to section 125. Which are specific penalty provisions. Okay. Then there is section 73, 74, and from 24-25 onwards, 74A. Those sections are for demanding tax, issuing notices, closure of proceedings. They also contain a provision of penalty. Now the law is very clear. There cannot be double penalty. Okay. So if I have done a mistake once, you cannot take the amount from me, you cannot penalize me twice. So either there will be penalty under 73, 74, 74A, or there will be penalty under 122 to 125. You cannot have double penalty for the same portion, and this is principle of double jeopardy. This, fortunately, they have got in the Act also. So there is a specific section 7513. Because practically we come across cases where the department invokes both the clauses in the show cause notice. So in that case, you can specifically make a reference to 7513, which says that if there is a penalty in 73, 74, there will be no penalty on the same person for the same omission under any other section. So the condition is, it has to be the same act and same omission. If it is different act, different proceedings or different action, there is a possibility of double penalty. Next legal principle which we need to keep in mind is the show cause notice should specify exact provision or exact clause under which it wants to impose penalty. We have seen many cases where the show cause notice will say, therefore you are required to pay tax along with interest and a penalty leviable under the provisions of this act. General notices. There will be some cases where you will say you are required to pay tax under 73, interest under section 50 and penalty under section 122. Now 122 itself has many subsections, many clauses. So there's a Supreme Court judgment, Amrit Foods, which specifically says if the show cause is not giving the specific clause, you cannot impose penalty under that particular proceedings. What is the logic? What is the logic of this? Why does Supreme Court say that? Anybody knows the logic? Correct. It is vague, right? So you are not telling me what provision I have violated. You are not telling me what provision I have violated. How are you? I am supposed to make a counter to that particular provision. That's the logic. But having received notices like this, what should be our response? First point, I have told you. But alternatively, in our response, we should also make an alternate submissions that even without prejudice, I don't get covered under that particular section. So you get saved on both the aspects. Of course, you will succeed on this legal principle, but at what level? Next, whether mens rea, fraudulent intent, malified intent is mandatory requirement for penalty. See, many a times when client comes, sir, mistake हो गया, I have done a mistake. There was कोई चोरी करने का इरादा नहीं है. होता है ऐसे? Genuinely? Then why should I get penalized? That is the normal question. Why should I get penalized when there is no fraudulent intent, when there is no intention to evade payment of tax? Is it legally sustainable? No or yes? पक्का कोई yes वाला है? कोई भी नहीं? No. Okay. So the answer is correct, no. But it depends on the penalty provisions. So there are certain provisions where mens rea is not a requirement. But there are certain other provisions where penalty is leviable only when there is mens rea. So for those provisions, if we discharge our burden that there was no malified intent, there was no intent to evade payment of taxes, you succeed in setting aside the penalty. Whether the department officers have an option to impose lower penalty. For example, let's take section 74. 74 is a section where the tax demand is on account of fraud and malified intent. This section says you can levy 100% penalty. Now the adjudicating officer comes, he sees that okay, you technically you don't have any fraudulent intent. There was genuine interpretation issue or there was some other issue, somebody else fooled you, whatever the reasons. He says, okay, there is there, but I cannot drop the demand under section 74. So instead of 100%, I will levy 50%. Okay, I will have a midway. So instead of 100%, I will levy 50%. Is he correct? Is he correct? No. Any reason, sir? Then he can do. But he doesn't want to convert 74 into 73, then your demand becomes time bar. So he finds a midway. He finds a midway because if he converts 74 to 73, it is possible some part of the demand may also be time barred. See, the law is if the act, if the section imposes a fixed penalty, okay, penalty equivalent to tax, then there is no discretion to waive penalty. So it is either, if suppose there is an action in 74, so either you have done malified or you have not done malified. If you have done malified, 100%. If you have not done malified, 0%. This is how. But if there is a provision, penalty which may be levied up to 25, we have certain provisions, up to this. When you have a provision of up to, that means it is a discretionary penalty. He may levy, he may not levy, he may levy 50% and all. So this is how the penalty provisions have to be done. Second, next legal principle, penalty amount in the order cannot exceed the penalty proposed in the show cause notice. It's a general principle, not specific for any case. So if penalty in show cause notice was proposed under 122(1), you make a submission and he says, okay, 122(1) is not applicable, I agree. But he will impose penalty under 122(2), that is not sustainable, even though genuinely it may be imposable, if otherwise. But still legally that is not sustainable because penalty demand beyond the show cause notice is not allowed. Okay. Everybody is aware of 73 and 74, or somebody needs revision? ठीक है, रिवीजन हमेशा रिवीजन, एग्जाम के पहले भी कितना करते थे, हाँ पूरा ही नहीं होता है बस में, और एग्जाम सेंटर के पहले भी हम लोग बुक बंद नहीं करते थे, राइट? सो जस्ट रिवीजन ब्रीफली, 73 and 74 both are provisions for issue of notices demanding tax, interest and penalty. 73 applies when tax has not been paid on account of reasons other than fraud, other than willful misstatement, other than suppression with intent, means non-malified reasons. There the penalty is 10% of tax or 10,000, whichever is higher. Of course, there's a demand time limit, passing the order in 3 years from the annual return and all. Vis-a-vis this, you come to 74. 74 applies where there is a recovery on malified reason. 74 applies where there is a recovery of malified reason. There the time limit also increases and penalty also gets increased to 100%. So 73, 74 both provide for giving you the notices along with the applicable penalty. Now we have a new section from FY 24-25, 74A. Okay? Primarily, it is not different from earlier sections. Only thing, the time limit which was there, 3 years and 5 years, now it has reduced. Now notice has to come in 42 months. And for closure of proceedings, earlier we had a time of 30 days, now it is 60 days. But conceptually, legally, it remains the same. Here also, if fraud, 100% penalty. If no fraud, then up to 10% or 10,000. So that is a single. Okay. Now this was 73 and 74. Majority notices which we see today, they invoke 73 and 74, if you have seen. No, it is only period wise it is segregated. 73, 74 is up to 23, 24 financial year, and 74A is from 24, 25. No. So for, if you get a show cause notice of 24, 25 under 73, then it is not applicable. Technically it is not applicable. It can be a clerical error. It may not affect the ultimate outcome. Okay. Now there is one more section. We will come to that. आते सब cover करेंगे सर. So there is one more section for penalty. It is section 122(2). There is one more section, 122(2). This section also imposes penalty. Identical provisions to 73 and 74. So if a person does not pay tax, does short payment of tax, erroneous refund, ITC availed, utilized irregularly, then non-fraud, then 10,000 or 10%, fraud, then 100% or 10,000. Now the first question comes, what is the difference between 73, 74 and 122(2)? Why do I have two provisions? What is the reason? Copy-paste mistake hai? Is it a copy-paste mistake? Is it intentional? If it is intentional, then what is the impact? Is it in our favor? It is against us? और ये provisions पहले बन गए थे, 73, 74 बाद में बने. What is the reason? हाँ, and 122 by DGG है. सर वैसा तो नहीं है लॉ में. हाँ, आपको लगा ये नंबर बड़ा है तो ऑल इंडिया दे देते हैं बिकॉज आपको जैसे मैं बोलूं, हम सब ने भेलपुरी खाई है ना, ठीक है? भेलपुरी में किसका टेस्ट आता है? पूड़ी, चना, चटनी, वो क्या बोलते हैं, मुरमुरे, यहाँ बनाने वाले के हाथ का। हाँ, वैसे ही जीएसटी लॉ जब आया था तो इट वाज अ भेलपुरी ऑफ वेरियस एक्ट्स. Many of the provisions were incorporated from other acts, central, VAT, international, all. So therefore this I was also thinking, I mean, why there are two separate provisions? So one difference is 122(2) applies to a registered person and 7374 applies to any person. So 122(2) applies to registered person, 7374 applies to any person. So does it mean that if department wants to give a show cause notice to a registered person, it has to invoke 122(2) along with 7374? Can we take such an interpretation? Of course, this has not been tested judicially, but can we take an interpretation, since 122(2) is a specific provision for registered person, 7374 is a general provision, please, you have to invoke 122(2). Or 7374 covers any person also covers registered person, so I am covered under 7374 also. This is one thing which has not been judicially tested. Of course, we can always take a ground in our submissions that you can always take. As of now, this has not been judicially tested. One is specific, one is general. But we apply this logic in exemption or rate entries. If there are two rate entries, I can go under whichever rate entry I want. Similarly, for department also, these are like two ways to recover penalty. They can go in whichever way it wants. But this argument needs to be judicially tested. Okay. Next. So now we'll come to closure of proceedings. See, just like we have notices under 73, 74, we also have an option to close those proceedings by paying certain amount. There are different amounts, different stages, how we pay, and what is the impact or what challenges we can face. Okay. So under 73, if department determines tax and it informs you, maybe through audit objection, scrutiny notices, or DRC 1A, and you pay the tax along with interest prior to notice and inform the department, then you will not pay you will not get a notice itself. So the proceedings will be deemed to be closed. You pay the tax in DRC 3, you will get a DRC 4, that proceedings are closed. Now suppose you don't pay prior to show cause notice. So you get time to pay this tax and interest under section 73 within 30 days from notice. There is one exception we'll discuss, but in normal cases, you will get time for 30 days to pay the tax and interest. Proceedings closed, no penalty. When I talk about proceedings closed, it is not only about tax and interest, because you will say, wo to bhar diya, but it will also close the penalty proceedings. Entire notice proceedings will be closed for 73 notices. There is one exception we will do. Now suppose you have a notice, maybe under 73 also, where there is a notice on the company and there is also a penalty on the director. It may happen in 73 or it may happen in 74. So if there is a notice on the company, notice on the director, and if you opt to pay and close the proceedings, then the penalty on the director also gets closed. It is not that he will keep on fighting, company proceedings are closed, that will not have. All the co-notices in that notice, in that proceedings, the matter will get closed. Now, after 30 days, if you pay from the show cause notice, then there will be a penalty of 10% of tax or 10,000, whichever is higher, if you ultimately lose. So therefore, when you receive show cause notice, within the next 30 days, you should decide whether you really want to contest or you don't want to contest. If you don't want to contest, you can pay and close the proceedings. Now this 30 days time limit is from the date of issue of notices. What is the date of issue of notices? What will be the date of issue of notice? Receipt of notice or issue? Law talks about issue of notice. Law talks about issue of notice. So in the context of GST, what will be the date? Earlier law, old laws had date of receipt, old law. In the context of GST, what should be the starting date for computing this? 30 days. Issue means what event is issue? Issue on the portal, date on the notice or date on the portal, if it is different. Now let's take an example. Notice is signed because there is a show cause notice and there is a DRC 1. Okay? And some cases may the notice will be given manually to you, like DGGI and other investigation authorities in central, they don't upload the notices. They will give you by post or email or hand delivery or whatever. In that case, let's say there's a notice dated 1st April and you are given the notice on 15th April. What should be the time limit? What is the 30 days? When are they expiring? If the notice is dated 1st April and you receive on 15th April, and even though notice is issued on 1st April, it's a genuine notice. Yeah. So what is the time limit of 30 days? How many of you feel 15th May and 30th April? Koi nahi? Huh? Nobody feels 30th May? Okay. Sir, if you read plain reading, then issue will be date of issue or signing. But law has to give you 30 days. Technically, law has to give you 30 days. So it cannot happen. So department will issue and he will ensure it comes to you on 29 day. So technically, law has to give you 30 days. Why this word issue was there in GST provision? Because ultimately it was supposed to be automated. The moment notice is issued, it is delivered on the portal. So therefore, in the law, they kept issue. They did not contemplate a scenario when manual notice or notice other than portal is also issued. So ideally, it should be date of receipt. So if you receive the notices, you should record the receipt. Of course, this will be a bone of contention between you and department. As far as possible, try to pay the amount from date of notice practically. Otherwise, we can, in my view, you can contest. Now, there's one exception which I told you in section 73. That exception is if the tax demand is on account of self-assessed tax or tax collected and not paid beyond a period of 30 days, then this benefit of closure of proceedings is not available to you. So otherwise it is available. If it is a ITC demand, you can close in section 73, no problem. But if it is a self-assessed tax or if it is tax collected and not paid and the delay is above 30 days, then you are not eligible for the benefit of this closure. So if there is this type of demand, then even though if you pay interest within 30 days, your notice proceedings will not get closed. Now what is self-assessed tax? Self-assessed tax under section 75 is tax declared in GSTR 1 and not paid in 3B. Tax declared in GSTR 1 and not paid in 3B. But this self-assessed tax covers only this or it will also cover other scenarios. So let me give an example. You are supposed to pay tax on some particular supply. You thought it is exempted. So you are providing this supply for 4 months. Okay? After 4 months, somebody told you, oh, this is not exempted, this is taxable. This is not exempted, this is taxable. So what will you do? You will do your own self-assessment. You will do your own self-assessment and you will discharge this tax after 4 months. Okay? Whether we will get the benefit of closure of proceedings in this case. Whether you will get the benefit of closure of proceedings in this case. You have understood the example? Example is understood, facts are understood. Whether this tax will be treated as self-assessed tax because it has come in your return, or this will not be treated as a self-assessed tax so as to apply for closure. सर आंसर दो ही है, yes or no, unless तीसरा है कि मुझे पता है मैं नहीं बताऊंगा, that's a third answer, but yes or no, it is self-assessed, so you will not get a benefit of closure. Sir, anybody feels it is not self-assessed? No? It is self-assessed. Okay, now let us keep the answer pending. Let me give you one more example. This same supply, it was exempted. Okay, I did not know tax is to be paid. Now, after 2 years, department comes either for audit and scrutiny, and it says, please pay the tax on this supply. Okay, so I paid the tax on this supply, right? I paid the tax on this supply. Whether I get benefit of closure of proceedings? Yes. Why? It is not self-assessed. Matlab, if I pay on my own, you will levy penalty, and if you point out, then no penalty. Should we apply this logic? कि हमने नहीं भर के we justified their active involvement, we were able to test their skills and therefore no penalty, or because I paid on my own few days back on my own, I am a genuine taxpayer and therefore please penalize me so that next time I don't pay on my own, I keep it for you. Huh? What should be the right approach? What should be the right approach? Huh? In both the cases, you should go. Logically, if you think, self-assessed would, therefore see the way self-assessed tax is defined, it may strictly not cover. Okay. So therefore, there is an issue that only when I show in 1 and 3B, why does the government does not give me benefit? Because the moment you show in 1, somebody takes an ITC. Because somebody took an ITC, instead of getting tax, government had to in fact give more money out of their pocket. And therefore they say you pay the penalty. So if I have not shown earlier in return, without tax, government has not lost anything, I can argue that it is still not self-assessed karke. Okay? Similar example, if there is a reverse charge mechanism and you pay after 6 months in your 3B returns, is it self-assessed? RCM payment after 6 months you pay in your 3B returns, is it self-assessed? It is self-assessed. So you will not get a benefit of this closure? No, but this provision does not apply if 30 days delay is there for self-assessed. So therefore, even if there is a delay in RCM liability, in my view, it is not self-assessed because I am not showing it in 1. It is pure 3B. It is pure GSTR 3B. That is my view. Of course, this needs to be tested judicially. Okay. Now, coming to the same provisions for section 74. 74 also has closure proceedings. There, if you pay the tax and interest prior to show cause notice, then you will have to make a penalty under 15%. Up to 15% of tax, you pay the penalty, your proceedings get closed. Now, if you pay within 30 days of show cause notice, if you pay within 30 days, then you have to pay tax, interest and 25% penalty. If the main party pays the tax, all the proceedings against co-notices are closed except proceedings of offense. When we talk about closure, penal proceedings are closed. Criminal proceedings, offense, section 132 is not closed. Payment of tax after 30 days from the order, then you have to pay 50% of tax. Otherwise, you keep on fighting. If you lose 100%, if you win 0%. Okay. Now, my next question is, there are many cases where there is a main party and there are many co-notices. There can be directors, there can be employees, there can be our other firms. Wherever there is, for example, let's say there is a fake credit allegation from the department, there is circular trading, there are networks who are engaged in this. So there will be a main party who has taken the credit. Against that party, there will be a demand. Okay. And the other parties, there will be levy of penalty. Now, if the main party pays the tax, that in that same notice, all the co-notices proceedings are closed. Okay. So let's take there is a DGGI investigation going against the main party. During investigation itself, the main party pays the tax, interest and 15% penalty. Will it also close the proceedings on the other parties? The first party, the main party against whom there is going to be a demand, it pays the tax, interest and 15% penalty. Will it also close the proceedings against all the other notices? Yes or no? Yes or no? Because the section says once a person pays this tax, the officer will not serve a notice at all. The officer will not serve a notice. But will not serve a notice to whom? To the party who has paid or to the other parties also? How do you ensure that, sir, I am a part of that proceedings and therefore you cannot give me a notice? Why I am telling you the differences? I'll tell you the differences purpose. Now, many a times happen that there are certain cases where people decide to close the proceedings. Okay? Maybe amount is not substantial or whatever business reasons. Reasons are inconsequential. Now, if you want to close, because you want to ensure closure of all the other parties, and if you take this option of 15%, today the department may take a stand that this will close proceedings against all the persons. But tomorrow, if let's say the parallel investigation starts somewhere else, that person comes, can the co-notice say my proceedings are closed? It is difficult for him to substantiate. That clarity is not there in the law or circular. But suppose a show cause notice comes, and after the show cause notice you pay 25% of penalty. Then if your name is there in the show cause notice, then it is deemed to be closed. So there is a possibility that if you pay prior to show cause notice, since there is no official record that whether your proceedings are closed or not, except the main party who has paid the co-notices, then there can be difficulty in arguing that all the proceedings. Logic is it should get closed logically, but it is difficult to practically argue. Instead of that, you pay 10% penalty more. You close the proceedings after the notice. So whosoever is mentioned in that same notice, same proceedings, the proceedings will get closed. Okay. Now, therefore the next question is payment of 25% penalty within 30 days from show cause notice closes the proceedings against all the co-notices. Okay? Whosoever is mentioned in that notice, definitely the proceedings will be closed. Now suppose the department issues separate notices to each and every one. Suppose the department says I will issue one notice, notice number 1 to main party, notice number 2 to director, notice number 3 to the other person who supplied the invoice, notice number 4 to his supplier. Then what is the impact on closure? Can I say all the proceedings are closed or only the first notice is closed? Can I say all the proceedings are closed or only the first notice is closed? Sorry, sir? If the issue is same, that is one view. Any other contrary view? Sir, आप ले सकते हैं, democracy है. You can always take contrary view, right? Any other view? Or since we want closure, that is the view which suits me. Okay? Okay. The answer is correct. If you see the section, it talks about closing the proceedings. Merely by bifurcating the notice, you cannot take away the benefit of that particular section. So if somebody gives single notice, usko benefit. If somebody splits the notice, to usko no benefit. That cannot be the intention. Of course, now there's a recent Patanjali Ayurveda judgment. It is in a different context. But there are certain findings which show that even if you pay amount, the proceedings may be closed. No, not closed. I feel that judgment will need some review or something in my view. But let us see. Normally the section is very clear. Once you pay tax, interest and 25% penalty under section 74, all the proceedings of penalty against all the persons for the same proceedings will get closed. Now next, take an example. I get a show cause notice. Okay. I feel there is a 50-50% case against me. Okay. So I say because 18% interest is too much, so I pay the tax. Then I feel 100% tax is penalty can also be too much. So I will pay tax, I will pay interest, and I will pay 25% penalty also. Okay. Once I pay this, the law says the proceedings under the notice are deemed to be concluded. Now, can I pay this and still contest the notice? That means within 30 days, I will pay tax, I will pay interest, I will pay 25% penalty. I will still file a reply that I don't agree with the submissions. And once I receive an order, I will contest. Is it possible? Or department can say, since you have paid tax, interest and 25% penalty, nothing doing, all proceedings are closed, I am not going to give you any order also. What is the correct approach? What is the correct approach? Payment under protest. But my section doesn't distinguish between protest and non-protest. There is no legal concept of protest in the Act. Of course, there is established law, legal concept, but in the GST law, there is nothing like protest. So can the department come and say that, sir, since you paid tax, interest, 25% penalty, ab bacha kya? Why do you want me to adjudicate? All your proceedings are deemed to be closed. Hence, you will only get a closure order. Or I can take the order and file the appeal. What is possible? Can I take the order, ask for an order and file an appeal and still contest even after paying tax, interest and 25% penalty? Can I do that? Yes. Any reason for that? Any reason? Logic? Appeal is our right. That's the correct answer. And even this conclusion of proceedings is conclusion from the department. Once the order is issued, this provision does not take away my right of appeal, unless law specifically does that. But practically what you should do, even if you want to pay, please pay under protest. If you mention it in your payment document that I do not agree with the allegations, but just to protect interest or business compulsions I am paying, this is allowed, you can do it. There's a Supreme Court judgment which was there for e-way bill, same provisions, similar provisions, we can use that. Sir, you will get everything, whatever you are entitled for refund. Tax also, na? Because if you succeed, you will succeed on tax also. If you have to succeed, obviously you will succeed on tax, only then you will get interest. So you will get everything. That is one of the possible methods to contest the proceedings. That is also possible method. Now next, what are the ingredients of levy of 100% penalty? The ingredients are fraud, willful misstatement, suppression of facts with intent to evade duty. Okay. So these ingredients are required to be specified in the notice. Unless they are specified in the notice, unless department makes a case, there will be neither be extended period, there will be no 100% penalty. Now suppression of facts is defined. See, earlier laws, service tax, excise, it was not defined. Suppression is defined in GST. Suppression means non-declaration of facts or information which assessee is required to declare in his returns, statements, reports and documents. So if something is required to be declared and you don't declare, that is suppression as per the definition. Okay. So suppose you gave an exempted service or you gave a supply which you felt it is a no supply. It is not a supply at all. This transaction is not a supply. I have just received compensation or something. And you don't declare in your returns. Is it suppression? If ultimately it is held that it was taxable, is it suppression? Is it suppression? Because you are supposed to declare in the returns. So is it suppression? Sir? Suppression nahi hai. if you read the definition, it says you are supposed to whatever non-declaration of what you are supposed to declare. Is that suppression or not? Technically suppression, but will it involve penalty? It will only invite penalty where suppression is with intent to evade payment of taxes. So simpliciter, any suppression does not invite 100% penalty. It is only when suppression with intent to evade payment of tax. So that is where we need to prove. So there is judgment of HMM Limited in earlier law. There are GST judgments, Vadilal Enterprises and others, where they say the show cause notice should clearly allege that there was an intent to evade payment of taxes. Suppose show cause notice says the assessee did not disclose this value in its GSTR 1 returns, 3B returns and annual returns, and therefore they are liable to penalty. In that case, they cannot levy penalty under section 74 because there is no allegation of intent to evade payment of taxes. Your show cause notice should specifically allege, if it wants to invoke 100% penalty, that there was a intent to evade payment of taxes. Only then you can say, only then the department has a right to recover the 100% penalty. So these are all judgments. This PPT will be there with you, where the courts have said mere suppression or mere failure to declare will not be treated as mala-fide intent unless it is coupled with a specific intention to evade payment of taxes. Now, take an example. Onus is on them to allege, and if you want to circumvent, then you can prove with your documents. So take an example, there is a scrutiny of your records. There is something which is recorded in your balance sheet, or something which is there in your income tax return, something which is there in your ledgers. So department comes, does scrutiny, takes your ledger, it comes to know that there is some short payment or there is some wrong ITC availment, whatever, nature-wise, or, and it gives you tax. Will any detection in audit or scrutiny is subject to 100% penalty under 74, or it will come at 10% penalty under section 73? Any detection in audit, should it be levied at 100% penalty under 74 because it was not declared in the returns, or it will be 10% penalty under 73? Depends, मेरे client का है कि नहीं, हाँ? So depends. What is the criteria? How can I contest? How can I contest any imposition of 100% penalty? What are the guidelines? Mala-fide intent. So there are judgments under earlier law, same logic will apply here also, which says if you have detected from the books of accounts, from the records which he has submitted, where is the question of mala-fide intent? Because if somebody has to evade tax, is he a person he will record in the books and evade tax? Or he will not record at all, or he will do some misrecording. Suppose instead of revenue you will reduce from expenses, something like that. Those actions can be treated as mala-fide. But if something is based on audit, something is based on scrutiny of records, there are various judgments which say no mala-fide intent can be alleged. No mala-fide intent. Similarly, if you are aware, in service tax, there were various notices between income tax return and service tax return. You have seen, na, returns mein service tax and income tax data they were matching and they were giving the demand. Tribunal says, where is the question of suppression? Income tax return is available with the government. It is already available with them. I have not hidden anything. So therefore, there is no suppression, there is no mala-fide intent. Correct. Very good. बताइए आप sir. How do you say that? हाँ. Whatever suits them. Now, if I apply this logic of these judgments, since it is recorded in your books, since it is recorded in your books, the transactions are recorded, there is no intent to evade. You can very well argue it is not intent to evade these taxes. Of course, that specific thing has to come, because earlier format mein, the old format in GSTR2, they had a payment date also on the portal, but this is not there now. So this payment date, of course, is your, but if you are not reversing, for some cases, if you have left out, for others you are reversing, or you have paid the amount to that person has paid to the government, still you are asking reversal from me. So we can argue there is no intent to evade, because you have ultimately paid. But if you have not paid to the vendor in 2 years, and you know you are not going to pay, and still you are not reversing the credit, then the situation may be different. You can argue no intention, it is part of my books of accounts, but matlab, slightly on certain facts, it may go against you also. So next, revenue neutral situation. Sir, revenue neutral means reverse charge. So I was supposed to pay tax on reverse charge basis. Okay? I forgot to pay it, or import of services, I was not aware about its taxability. Department comes after 2 years and says this foreign remittance which you have done, you are supposed to pay the tax. Okay? So after 2 years I pay the tax and I take the input tax benefit. So it is revenue neutral, totally revenue neutral. Is there an element of fraud or suppression or malified intent in revenue neutral situations? Is there an element of fraud or suppression or malified intent in revenue neutral situations? So there are various judgments, Supreme Court judgments, that if the situation is revenue neutral, then there cannot be any fraudulent intent. If it is revenue neutral, then there cannot be any fraudulent intent. There cannot be any fraudulent intent. So in such cases, if there is a proceedings under 74, then you can safely contest that penalty based on these judgments, I'll give you a variant. Suppose you have lots of unutilized ITC. Your product is in inverted. Okay, so your output is 5%, your input is 18%. Goods also and services also. So are you eligible for refund? Inverted mein you are eligible for refund, but you are eligible for refund of only inputs. You are not eligible for refund of input services. So that input services credit is getting accumulated. Now there is an import of service liability, which you have not paid. Had you paid 2 years back, it would have added to your ITC accumulation. Is it revenue neutral situation? We say revenue neutral because we say to the department, sir, I pay tax, I take ITC. So you don't get anything. I pay tax, I pay ITC, so it is revenue neutral. But if I take ITC and I am not able to utilize it, is it a revenue neutral situation or it is not a revenue neutral situation? Not revenue neutral. So then whether I'll get the benefit of this, I may not get. But if I am eligible for refund and after 3 months I am going to get a refund, then I can always say it is eligible for revenue neutral situation. Now taking this example, suppose you say ki if I had paid tax, my customer would have got the credit. Right? It is B2B supply, I pay tax, he gets the credit. Is it revenue neutral? Is it revenue neutral? So if I had paid tax, suppose I paid tax on 100, department says you should pay tax on 120. So if I had paid on 120, my customer would have got the credit of 120. Then, so is it revenue neutral? Whether revenue neutrality should apply to self or it will also apply to transaction with customers. So there are contrary judgment, but the law which appears is for your customers and it may not apply strictly. Otherwise, what would happen? Or B2B transaction, there was one judgment where commissioner which says then you don't pay on B2B transactions. Everybody pays on rupee 1 because ultimately B2C transactions will only ever get the tax. So maybe revenue neutrality as far as self is concerned, you have a very strong case to non-imposition of 100% penalty. Okay. Levy of penalty under section 74 when facts are in the knowledge of the department. Okay. So if department is aware that you have taken this particular thing or there is a possible demand against you, can the department say there is a malified intent or suppression? Can the department say that? No. So how do we apply this concept in GST? If there is a demand of 2A and 3B, is there a suppression at your end? If there is a demand of 2A and 3B, is there a suppression? No. Why? Suppose you get a notice of 2A and 3B, how will you fight that there is no suppression? What are the grounds we can take? Pre-disclosure. Where? No. 3B mein to you disclosed your ITC. Okay. But you did not disclose any comparison. Where did we disclose the comparison? We disclosed the comparison in GSTR 9. So in my GSTR 9, if there is already a difference between 2A and 3B, then department cannot allege any suppression. If my registration of the vendor is already cancelled and he has not filed 3B returns, before me, the department is the first person to come to know of this, that this person has not filed the 3B returns. मुझे तो बाद में पता चलता है. Department is the first person to come to know that that person has not filed his 3B returns. So can the department come and say that there is suppression because that person did not file 3B returns and still you took the credit? Still you took the credit. So in that cases where the department can say there is a suppression, in my view, it cannot say that there is suppression. Similarly, there are many cases where scrutiny is done by your jurisdictional officer under 61. He gives you ASMT 10, you submit the reply, you submit the data, and he will issue you ASMT 12. After some time, either the center will come, the other authority will come, or this very person's audit team will come and say, no, something is payable for that particular period. In that case, will there be 100% penalty on account of malified intent? No, because the facts are already available with the department earlier. Similarly, when we give audit, see when we have an audit, whatever data we give to the auditor, departmental auditor, we should keep an acknowledgement of that. Of course, you may feel that he is not going to acknowledge my submissions, but at the time of conclusion or wherever, send a mail to him that during the course of audit, I have given you all this data. I have given you all this data. What does it do? Subsequent audit, when the officer comes, he cannot say that there was suppression, because many a times when subsequent auditor comes, he says that that audit is test checked. So he has only seen other issues. He has not seen this particular issue itself. Then you can prove that once I have given the data to the officer and there is no objection, it means department was aware of the facts and hence there is no particular suppression in this particular case. Okay. Now suppose you receive a notice for 1920 to 2122 on a particular classification issue. Okay. Subsequent period, also you are continuing with your same classification. Okay. So obviously you are going to receive a second notice for the subsequent year. Can department allege suppression in subsequent notices? So first notice when department came, so department did an investigation. It came to your office in April 22. So from 2019-20 to March 22, they gave you one notice. Okay. Same issue we are continuing, same classification dispute is there. Still as per department there is short payment. So they will also give you notice for 22-23 after some time. They may not give you notice immediately. So after some time they'll give you 22-23, 23-24. Can they levy 100% penalty? Can they levy 100? Because first notice will be with 100% penalty. So second notice is also same issue, same facts. Can they levy 100% penalty in the second notice? Sir, kya hua? Yes, no? Yeah, you will decide only once notice comes. Huh? Yes or no? No. Why? Reason? Logic? What is suppression? Suppression is what the other person is not aware, which I have hidden. Once department itself is aware by issuing a notice, in the second notice, how can they say I was not aware? Department cannot say I was not aware, ये तो आप मुझसे छुपा रहे थे. So this is a settled principle of law. Any second or subsequent show cause notice, there cannot be allegation of mala-fide intent. There cannot be allegation of mala-fide intent. And this principle they have put in section 74(4) also. There's a Nizam Sugar judgment, old Supreme Court, 74(4), this same principle is there. Now, whether a penalty can be there for bona fide belief and interpretation issues. So let's say there's an interpretation issue, interpretation of rule, whether if the invoice is not coming in 2A, you can take the credit or not. Okay. Can the department levy penalty? They cannot levy 74, but they can levy 73. How do we prove that it was a genuine interpretation issue? Suppose in our reply, how do we prove that it was a genuine interpretation issue? One of, legal advice. So one is, there are certain judgments which says if that assessee has taken a bona fide legal reply, legal advice and acted on there, then you cannot say he had an intention to evade the taxes. वैसे. Similarly, if suppose you have informed the department in the past, if you feel there is some issue, you can always inform the department in the past, then also we can argue there is no suppression. Mere wrong claim of exemption does not mean there is suppression. Just because you claimed an exemption which was not available does not mean there is suppression. There is a judgment of Anant Wines. Okay. Similarly, if there is an advance ruling and you don't follow it is not your own advance ruling, it is somebody else's advance ruling, and you don't follow that, therefore it does not automatically mean that there is suppression. It does not automatically mean that there is suppression. Okay. So with this we finish 73, 74 penalty and 122.2. Now the next provision is 122.1. Okay. This is the next provision which is widely used for levy the penalty. Primarily this provision is used in cases of fake ITC, circular trading, wherever there is an allegation that the person has either not received the goods or not supplied those. So let us see a critical analysis of that. Normally in penalty, what do we do? I explain the provisions, I explain the quantum, okay? And then we decide penalty has to come or not. But in this provision, first we will see what is the quantum of penalty, and then we will see what are the various clauses. So what is the quantum of penalty in 122.1? This 122.1 has various sub-clauses. So quantum provision is there, and we have to see how much penalty will be levied for each clause. So the quantum of penalty which can be levied under 122.1 is penalty of 10,000 rupees or penalty equivalent to tax evaded or tax not deducted, TDS, or TCS not collected, input tax credit availed or input tax credit passed on or distributed irregular. Input tax credit availment is simple. You have taken credit in your freebie. Input tax distribution, we also know it is ISD credit, input service distributor. What is input tax passed on? Can somebody explain? What is input tax passed on? When can I say that I have passed on input tax credit? To branch. Sir, how will you pass on to branch? I actually raise a tax invoice for charging for my services. So I levy tax, I don't pass on ITC. So when will input tax pass on come? Any thought? No, ITC transfer is not allowed. आप कर रहे हैं? नहीं, it is not allowed. So therefore what he wants to say is fake supply or fake ITC. Okay? Let us see. Let us see how our penalty clauses covers what is the scope of input tax credit passed on. Okay? Or the refund claim, whichever is higher. So penalties whichever is higher, whichever is lower nahi. Otherwise सब 10,000 भर के निकल जाएंगे. Okay, next. 122.1, one crucial aspect we need to see, it only applies to taxable person. So 122.1 will apply to taxable person. It doesn't apply to non-taxable person. Taxable person means person who is liable to register or is registered. It will not apply to unregistered persons or persons who are not liable to be registered. So take an example. If you take a service from somebody who is covered under RCM, let's say GTA, transporter, he is giving you services under RCM. So he is not a registered person, he is not a taxable person, he is not liable to be registered if 100% RCM. Then he cannot be penalized under 122.1. There are other provisions, but he cannot be penalized under 122.1. So first 122.1, penalty will apply if you supply any goods or services without issue of invoice or issue a incorrect or false invoice for such supply. So if you supply goods or services without issue of invoice, then you are liable to penalty under 122.1. What will be the quantum of penalty? For this 122.1, small Roman 1, what would be the quantum of penalty? Which out of these 6 clauses, what should be the quantum of penalty? Penalty applies when supplies any goods or services without issue of invoice. Then what should be the quantum of penalty? Amount equivalent to tax, because if you have supplied goods without invoice, you have not paid a tax. Now second part of this section says, issues a incorrect or false invoice. Issues a incorrect or false invoice for such supply. What should be the quantum of penalty for that? The second part of the section says issues a incorrect or false invoice. What should be the quantum of penalty for that? Only? Wrongly. ITC passed on. So what? Why not tax evaded? Because he has paid the tax. So this section says you have issued a false invoice, you have issued an incorrect invoice, but definitely you would have paid tax. So therefore your quantum of penalty will be to the extent of ITC passed on. That is the only way where he can be covered. Next, issues any invoice or bill without supply of goods or services in violation of these provisions. So you are issuing an invoice without supplying the goods. So first case was supply goods, don't receive invoice, don't issue invoice. Second case is issue invoice and don't supply goods. What is the quantum of penalty? What will be the quantum of penalty if I issue an invoice and I don't supply the goods? 10,000. सब लोग वो सर they will multiply 10,000 penalty आप बोलेंगे तो they will multiply, industry will boom. So what should be the quantum of penalty in these cases? You are issuing an invoice, you are not supplying goods or services. What should be the quantum? ITC passed. ITC passed. Okay. No, when I pay tax, that means if I pay tax through cash ledger, no problem. Then this activity is allowed. That means if I pay tax through cash ledger, then we don't have any problem. It is only 10,000 because you paid tax to the government. Now suppose I paid tax through eligible ITC. One is I paid tax through ineligible ITC and other is I paid tax through eligible ITC. Then will my quantum of penalty change? Then will my quantum of penalty change? Can you then say ITC passed on is proper because your ITC was proper and therefore penalty is only 10,000? Can I say that? No. Okay. So therefore this, of course, what we are talking about, this interpretation, still there are no judicial judgments or something, but logically looks for this clause, the intention of the government is that they will relate it with the input tax credit passed on, because ultimately they feel that you will only issue an invoice without supply only when you want to transfer your ITC to some other person. So therefore it would be input tax credit passed on. We'll keep this and one more clause will read. Collecting any amount but failing to pay beyond a period of 3 months. Collecting any amount but failing to pay beyond a period of 3 months. Okay? Now what should be the quantum of penalty here? So I collected a tax, okay, I paid after 5 months. There was a genuine financial liquidity issue and all. So I paid after 5 months, okay. So there is a delay. I am subject to penalty. I get covered in this clause. What should be the quantum of penalty? 10,000. Why? Only 10,000. नहीं 52 तो TCS है for e-com operators. नहीं, tax collected is my as a supplier. So is it only 10,000? And suppose department does action under 73, how much department will get? If this same action was done in 73, how much department would have got penalty? That is late paid after 5 months or 6 months. So therefore you are saying there is no tax evaded. Okay, because I paid suo motu. So if we read that, then there is only 10,000. But same action if department would have done under 73, because it is self-assessed and collected tax, I don't get the benefit of closure, and then there is 10% penalty. Or we take an argument that this provision will only come when the tax is not paid prior to notice and department detects it. That is one of the other arguments which we see. But apparently there is a contradiction. Next, you collect any tax which you are not supposed to collect and you don't pay within 3 months. There also this same quantum thing will come. TDS, if you fail to deduct TDS or short pay DDS, then entire TDS amount you will have to pay as penalty. Now even if you short pay TDS, your supplier would have paid full tax to the government. Still there is equivalent penalty on the person who is deducting TDS. Similar provision for TCS. Okay. Next, main clause for interpretation. Clause 7. Takes or utilizes input tax credit without actual receipt of goods or services. Okay. So you are taking ITC, but you are not receiving goods or services. Then what is the quantum of penalty? What is the quantum of penalty? ITC availed? Because you are taking ITC and you are not receiving goods or services, we are violating the section 16. Huh? Okay. Now department circular says, take an example. We have cases of circular trading where there is one main party who will ultimately receive the benefit of the transaction, who will take the ITC on an invoice. The other parties are there, like let's say there's a main company ABC. Okay? It has purchased from A has purchased from B has purchased from C. A, B and C have not received goods or services, they have only received invoices. Then our department circular says that there will be double penalty on A, B and C. So department circular says what has A done? A has taken the ITC without receipt of goods. So that is covered under clause 7. What has A done? It has raised the invoice without supply of goods. So that is covered under clause 2. So A will be levied 200% penalty. B will be levied 200% penalty. C will be levied 200% penalty. And ultimately company ABC will be levied how much penalty on company ABC? Only 100%. So the person who actually takes the benefit has to pay only 100%. And the person who just transfers ITC has to pay 200%. And normally what happens in these transactions is there are basically persons in middle only earn a margin. So this penalty is not commensurate with what benefit you are getting. If we see the circular, if we see the board circular, so if you see these type of notices, main party gets 100% penalty. If there are 10 parties, department gets 2000% penalty. Okay, department gets 2000. Of course, this circular is still subject to judicial scrutiny. Whether in these transactions, penalty has to be only once or it has to be at each level. Now take an example, I am a normal person, take a normal this thing. I have taken credit on motor car. Okay, I have taken credit on motor car. Motor car credit is allowed? It is not allowed. And I short pay tax to the government. Okay? So government gets 100% penalty if there is a short payment of tax to the government. In this scenario which I explained, what was the short payment of tax to the government? Only by company ABC. Because A, B and C have neither taken ITC and they have reversed the ITC. So there is no question of taking something from the government. They were not supposed to pay and they were not supposed to take. So there also, even in this example, although the net impact to the government remains the same, the penalty quantum increases. So this will definitely has to be judicially, maybe it will go into scrutiny, whether this type of levy of penalty on each and every stage is justified or it should be restricted only to the net loss to the government. As of now, there are no clear-cut judgments on this particular issue. So the department is currently keep on issuing the notices where all the persons are getting 200% penalty, co-notices, and the main person is getting 100% penalty. Has anybody handled these type of notices? Any person? नहीं? अच्छे clients है सब. ठीक है. Next, takes or distributes ITC in contravention of ISD. Okay. So if you distribute wrong ITC through your input service distributor mechanism, then you are subject to penalty. And this penalty is quantum of credit, wrong credit distributed. This is quantum of wrong credit distributed. There is no 10% or 100% for ISD. So if you distribute whatever credit you wrongly distribute for ISD, you will have to pay that much penalty. Okay. Falsifies financial records, वो तो 10,000 जाएगा, is liable to be registered but does not register. So if there is a, you are liable to be registered and you do not register, 122(1)(11) में you can be subject to penalty. Penalty would normally come to 10,000. Furnishes false information. These are all general clauses. Okay. Fails to maintain books of accounts. High Court says maximum penalty is 10,000. 10,000 CGST and 10,000 SGST. Issues any invoice or document by using the registration number of another person. So you are issuing an invoice or document by using the number of another registered person. Okay, so there is a penalty. How much penalty? You are issuing an invoice by using the registration number of another registered person. How much penalty should come? So the question is, if you say I have issued invoice by his registration number, in whose return I have declared. So either I have issued an invoice, let's say you are registered, to my customer I give your invoice. It is not declared in your return, but my customer takes the credit. Okay? But will you treat it as my invoice and make me liable for registration, because 122(1) is registration or liable for registration, or you will treat it as your invoice? That is the question in this. But this happens in very rare case. Normally there is a separate provision for the person who gets the benefit. Okay. 122(1)(a). If a person retains the benefit of transactions covered in 122(1), what are the transactions? See, normally what happens, many of these fake credit or circular trading transactions, there is one mastermind. Okay? What is the role of mastermind? To mind the business of other persons. Okay? Therefore, he is mastermind. And many a times this mastermind doesn't come in the picture. So he will not be liable for, he will not get GST registered, but he will manage at the back end and he will retain the financial benefit. So 122(1)(a) says, if you are retaining the benefit of any transactions of supply of goods without invoice, issue of invoice without supply, or taking ITC without taking ITC without receipt, taking or distributing ITC of ISD, if you are retaining benefit of that, then also you will be equivalent amount of penalty under 122(1)(a). This is e-com operator. E-com operator, if he allows the unregistered person to supply, then there is equivalent penalty. Okay. Next clause. Any person who aids or abets of the offense specified in 122(1). So it is aiding or abetting. Can anybody tell me what is I am aiding and abetting? What will be the scope of any person who aids or abets? No? What is aiding and abetting? Help the person in evading the tax. जैसे हमारे स्कूल में स्पोर्ट्स डे होता था, 200 मीटर देते, बोला मेरे से तो होगा नहीं, तू कर ले. ठीक है? So either whether I just giving advice, sir, you can do this business, whether that is aiding, abetting, or there has to be some positive involvement. There has to be some positive involvement. Only when there is a positive involvement, where there is a constructive role, you can say that that person has actually aided and abetted that particular offense. And the person who is aiding and abetting should know that this, whatever that person is doing is against the GST law. Whatever that person is doing is against the GST law. Now, second penalty, acquires possession or is concerned with transporting goods which are liable for confiscation. Acquires possession or concerned in transporting goods which are liable for confiscation. Normally, this clause will be applied to transporters. So, if the transporter is transporting goods which are liable for confiscation or in violation of these rules, then transporter can also be penalized under section 122(3). Under section 123. So take an example, transportation is done, there was some error in the e-way bill. There was some invoice mismatch in the e-way bill. Okay, obviously goods may get confiscated, penalty on the supplier. Can the department impose penalty on the transporter also? Can the department impose penalty on the transporter on the ground that you are transporting goods in contravention of the GST provisions, or that goods are liable for confiscation? Can a penalty be imposed on the transporter also? Yes or no? सर आपके आंसर पे डिपेंड करेगा कोई स्ट्राइक पे चले जाए कि नहीं. ठीक है? So yes or no? So there are judgments. See, ultimately, if you want to impose penalty on any third party or intermediary, there has to be evidence that he was aware that what he is doing is in violation. Now, if somebody gives e-way bill documents to the driver, is the driver supposed to do an audit of the documents and say, sir, आपका e-way bill proper नहीं है, आपका टैक्स इनवॉइस पे आपका HSN सही नहीं है, मुझे लगता है आपका 18% रेट होना चाहिए? नहीं. Is it possible? Is it required? The answer is no, right? The answer is no. So therefore, unless and until you prove that the transporter was actively involved, when the transporter is told that these goods are going without invoice and he gets caught, then definitely transporter can be made liable. receives any supply of services in contravention of provisions, fails to appear before in summons proceedings, fails to issue invoice, or fails to account invoice, means procedural lapses invoice, then maximum penalty can extend up to 25,000. Now, next we see imposition of penalty on directors and employees. Imposition of penalty on directors and employees. In invariably all investigation cases, you will find penalty on the main company, and there will be penalty on some of the employees or directors who, as per the department, have taken the decision to not pay the tax or avail the ITC. So what are the grounds? What are the judgments, legal positions where we can contest that? So one of the grounds, whenever it comes to director, first, we can contest that demand saying that if the director is not involved in day-to-day operations, so suppose it's a 2A, 3B case, suppose it is some disclosure in the return, can I say if there is an error in the return, director is responsible or the tax person is responsible? Is it? So if the director is not involved in day-to-day operations, we can argue that the director is not subject to penalty. Penalty on employees, if the employee does not stand to gain, there is no personal benefit to the employee from that transaction, then also no penalty should be imposed on the employee. This is judgment of ZU Alvi. Then penalty may Shilpa printing, that additional evidence is required to be shown by the department that employee was definitely getting something, either he was the perpetrator or whatever reason. Next, if the employee is working under the supervision of direction of the senior manager. Okay? So employee saying, yes boss, boss is always right, मेरे boss ने बोला ये करना है and I have done it. Will you impose penalty on the employee or the boss? Or both? Or both? यहाँ दोनों पे नहीं. हाँ? सर थोड़ा जोर से बोलिए. Boss पे and not on the employee. So employee बोलेगा सर boss ने बोला, boss बोलेगा उसने खुद किया. ठीक है, circular reference, right? So if he is working under the direction of senior management, there are judgments wherein it has been held, then you cannot make the employee liable for penalty. ये ठीक है, miscellaneous penalties है, track and trace का, penalty for failure to furnish, general penalty, okay. Now after all these clauses, if there is any other action which is not covered in 73, 74, 122, 123, then there is always a general penalty. General penalty under section 125, which says the penalty may extend to 25,000. May extend. That means it is discretionary. Maximum is 25 plus 25. The officer can impose lower. So one of the examples which I can think is delayed submission of 9C. Because 9C is actually a statement, it is not a return. 9C is a reconciliation statement. So delayed submission of 9 is late fee. Delayed submission of 9C, there is a penalty under section 125. Okay. Next, section 126. Section 126. There are certain general guidelines. There are certain general guidelines to determine the imposition of penalty. Okay. So section 126(1) says, no officer under this act will impose penalty for minor breaches. No officer under this act will impose penalty for minor breaches or procedural requirement like omission or mistake in document. So suppose your HSN was wrong. Your HSN was wrong, but your tax rate is proper. So it is a procedural lapse. A procedural lapse which could have easily been corrected or rectified, which can be easily corrected or rectified. Minor breach, okay, of tax regulations, then no penalty should be imposed. Acha provision hai. It's a good provision. It is there in the law itself, but thereafter they have defined minor breach. Minor breach if the tax involved is less than 5,000. So it is really minor. Okay? So if the tax involved is less than 5,000 for minor breach, then no penalty should be imposed. Or if it is a procedural violation, omission in documents, then no penalty should be imposed. Penalty under this act should commensurate with the offense. So the officer should actually see what is your conduct, what is your offense, and then only he should determine the quantum. Good provision, right? No penalty without hearing, that is okay. But there is provision of 126(6). There is provision of 126(5) which says if the person has voluntarily disclosed, then also you will consider this fact as reducing the penalty. But 126(6) says this entire provision of 126 means minor breach or considering procedural requirement, or if that person has bona fide content, then you reduce the, will not apply to cases where the penalty is fixed sum or a percentage. So if the penalty is a percentage or it is a fixed sum, this comparing the offense, comparing the conduct and deciding the quantum of penalty will not apply. So this provision, will it help you in 73, 74, 122(1)? No, it will only help you in 125. Basically 125 and another provision. बस उसके लिए special provision है, penalty provision से ज़्यादा. Now, after all the discussion, government feels there are some lapses for which we have not covered in penal provisions. So there is one section 127, which they say, if the officer is of the view that the act which is done by the person is not covered under any of the section, whether it is not covered in 73, 74, 129 or anything, then he can impose a penalty after giving hearing. This section does not talk about quantum of penalty, what penalty should be levied, on what it should be levied, how to be, nothing. But there is a general power that agar aur kahin cover nahi ho gaya, if I have failed to think that something can be liable for penalty, still I am giving you the power, please levy the penalty. Okay. I'll just take last 2-3 minutes, then we'll just conclude, otherwise I'll be penalized. Okay. So section 129. Section 129 basically talks about e-way bill violations, violations while transporting the goods. Anybody has handled any cases relating to e-way bill, consignment getting confiscated? You have handled, sir? Local, interstate, कौन से स्टेट में है? You have handled, or it is local, महाराष्ट्र में है, or it is in interiors? There is a practical challenge. The truck going from Bombay to Delhi gets caught on Rajasthan border. Okay. So then you have to explain that officer, he may listen, he may not listen, whatever. But many a times to get the goods released, you normally pay the penalty. 200% of tax, you pay the penalty and you get the goods released. Then can you contest that particular penalty order? Definitely you can contest. We saw that earlier judgment. Even though this provision talks about deemed to be concluded, this payment is only to get the goods released. You can definitely contest the penalty. Now there are various judgments on this. There are various judgments. This order, since tribunal was not there, wherever the penalty has been dropped, it has been dropped by high courts. We'll discuss 2 or 3 judgments where what principles they have given. But there are various judgments in 129. I mean, if you have to discuss, that's a separate session at all, separately. So, in one of the case, Manish Packaging, Part B of e-way bill was not there. Part B of e-way bill was not there. Okay. But tax invoice and everything was there. See, in e-way bill, there is a Part A and there is a Part B. Part A contains the document details. Part B contains the transportation details. Only when you fill Part B and you do, then only there is a generation of e-way bill. So, person, many a times happens, Part A is generated by the assessee, Part B is generated by the transporter. So, transporter ko jalbadi si, he did not generate Part B or gaadi nikal gayi. It get caught. So, there the assessee went to High Court and said that you see my Part A, I have paid the tax. I have paid the tax. There is no evasion. Since there is no evasion, I have paid the tax. Generation of Part B is only a procedural violation. Generation of Part B is only a procedural violation. High Court said nothing doing. If Part B is not there, it doesn't become a valid evable. And therefore, your action is correct. Your action is correct. In another case, the department caught hold of the consignment where there was a sale. Department said your sale documents are proper, but you show that you have purchased this from some person. You show me the purchase documents. And they confiscated the material. Okay. That person went to High Court, Kerala High Court said, this transaction is pertaining to sale. So if sale documents are proper, you cannot question the purchase and confiscate. And then penalty was set aside. Similarly, many a times when transportation is done, they will look at the invoice and they'll say your goods are not at 5%. Your goods are at 18%. You have charged 100 rupees. You should have charged 110 rupees, especially branch transfers and others. So there are High Court judgments where say the during e-way provisions, that person cannot question valuation, that person cannot question classification, that person cannot question rate. If at all there is an observation, it has to go to the jurisdictional person. He cannot confiscate the goods on that point. Then if he doesn't, then next is SFC, Environment Technology. The person gave a show cause notice department, 7 days mandatory time period for reply. Order was issued before 7 days. So the High Court said, since you did not give 7 days time, the order is null and void, and therefore the penalty was removed. Kamal Environment Tech, Delhi, this is a very good judgment. In this case, goods were imported under bill of entry. Okay? Goods were imported under bill of entry, but Part B was not generated. Now, similar to earlier case, goods were imported under bill of entry, but Part B was not generated or had some errors. There the Delhi High Court said that in these cases, since tax paying status is not disputed, goods are covered by a valid tax paying document, penalty is not applicable. So there are variety of cases in 129 depending on facts and circumstances. The only argument is you have to show your bona fide. As long as you show there is no evasion of tax, everything was proper as far as tax compliance goes, normally the high courts will set aside the penalty. So with this, I'll finish my discussion. If there's any specific query, we can take. Otherwise, I'll conclude. Any query, any practical experience, sir? How if somebody has succeeded in getting the penalty waived off, so you can share your tricks or you can give your contact details. Anna? Any query, anything we can discuss? Otherwise, we'll continue. How to defend bogus? Sir, recording is on. We'll discuss it offline. We can discuss it offline. Anna? Any queries? Okay. Chalo, thank you very much.
Thank you very much, Vinod Bhai, for this wonderful presentation of penalties. So I request now my colleague Aman Khandelwal to present a well-deserved vote of thanks.
Thank you, Jawad Bhai. On behalf of BCSE and all the participants present here, I take this opportunity to extend our sincere appreciation to CA Vinod Awtani ji for delivering an exceptionally insightful session on penalties under GST. Sir, your detailed exposition of the penalty framework under the GST law, including deliberation on section 73, 74, and 122 was extremely comprehensive and enriching. Your ability to integrate statutory provisions with relevant judicial pronouncement and practical examples brought exceptional clarity to the real-life applications of these sections. The structured approach, along with the depth of analysis, has greatly enhanced the participants' understanding of the penalty mechanisms and compliance expectations under the GST regime. Once again, we are truly grateful for the time and effort you dedicated to preparing this session and for your willingness to share your expertise for the professional advancement of all present here. Your guidance will undoubtedly serve as a valuable reference in our future practice. Thank you, sir. Now we take a break for refreshments. We'll resume within 20-25 minutes.